Perfect. All right, let's get going. So, hello everybody who's joined already. We're going to do this talk today on the H1 first half of 2021 on all the growth in the game industry that we've been seeing. So, the good folks at InvestGame have brought us this report. Many of you might have already read it. We're going to dive deeper today into these topics with my guests today here on the webinar. And we're going to open the floor at the end for questions from the audience as well. So you can start putting in questions as they come to your mind into the Zoom Q&A, which is at the bottom of the screen. So if you ever have used this Q&A before, it's pretty simple. It's where you sort of like do all the stuff in Zoom anyways. It's Q and et and A. And just go there and write stuff. And quick introduction. So today we will go through kind of like the highlights from this report, and me and Micha and Anton will share our thoughts. But let's kick off introductions. So most of you guys know who I am. So I run the Elite Game Developers podcast, newsletter, write a lot about gaming startups on different kind of mediums. That's sort of like my angle, is to share as much as possible about like what founders should know when they're building their companies. But let's go through you guys as well. So Anton, do you want to go first?
Yeah, sure. Hi, everybody. Hi, Joachim. And of course, hi, Micha. And I'm really happy that I'm here again for the first time. Yeah, I've been counting, actually.
Yeah.
And I'm happy that Micha is with us again. And so, I'm the co-founder of InvestGame, and I'm also head of media projects at My Games. And I should say also that I love your newsletter. I love your podcasts, Joachim. And I think that these is one of the top 3, I would say, of gaming newsletters I read on a weekly basis. So yeah.
Nice. Thank you, sir. So Micha, next.
Yes, hi everyone, and Joachim, Anton, really pleasure to see you again and be here again. So thanks for inviting me. I'm a big fan of all the great content you both produce and read this all the time. So so my name is Micha. I'm a senior EP and a founding member of Aream Co. Aream Co is a gaming focused investment bank. So we advise companies, mostly studios, on M&A and late stage financings. We're 17 people, most of us in London, where I'm based, a few people in San Francisco and Moscow. We've been very active in the space since the beginning of the year. We worked on, I think, 10 or 11 gaming deals, including companies like Jagex, EasyBrain, Golf Rival that just got sold to Zynga, Crazy Labs, and so on. So very excited to be here and talk about some of the trends we're seeing in the market.
Nice. Great to have you both here. I think we're going to kick it off now with Anton showing us what the report sort of includes, sort of like summarizing the key slides there. So Anton, please go ahead.
All right. So you guys can see the presentation, right?
Yes.
All right. First and foremost, I should say that even though I'm the only one from the InvestGame team here today, but that does not, of course, mean that I'm the only one responsible for the report. So I'd like to thank all of the team, and I hope they're watching us right now, at least some of them. And the guys have done an amazing job, and I just love the process of working with them, the process of creating these reports. And so, the InvestGame team has published its gaming deals activity report for the first half of 2021. And I believe some of you have already seen this one because we've released that a couple of weeks ago, actually. So I believe you've had a chance. But even if not, that's totally okay. So judging by what we found, judging by the data that we have discovered and analyzed, 2021 is all about breaking gaming records. So as you may see on the present slide, for the year's first half, there were 471 closed transactions with a total deal value of an amazing number of $44.2 billion, which is a vast Forex growth year over year. And we have also tracked 18 more announced transactions with a cumulative value of an outstanding amount of $50.2 billion for both unannounced and closed deals. Yeah, so that's you may also see the the segmentation for the deal type and target segment, but I'm not gonna elaborate on that right now because we're kind of limited with time. So this is the executive summary of the report, and I'm gonna talk a little bit about that. So over half of the closed deal value, over half of that amazing sum of $44.2 billion comes from 154 M&A deals, which accelerate the biggest growth for the gaming industry so far. So the $22.4 billion in the first half of 2021 presents the 460% growth year over year. So it was just $4 billion in the first half of 2020. And this value, it already exceeds the full results of the previous year, which was $12.6 billion with 218 deals. So we can only imagine what awaits us by the end of 2021, right? And of course, I'm saying this with Electronic Arts and Playdemic $1.4 billion deal in mind, as well as Tencent and Sumo Group deal of $1.3 billion. This is what data we have found when it comes to M&As. As for public offerings, they also achieved all-time high numbers, with 54 closed deals accounting for $17.1 billion versus just $4.9 billion in the first half of 2020, which provides us with 248% year-over-year deal value growth. And as for private placements, we have analyzed deals with the amount of $4.6 billion, which is a 226% growth. Again, amazing growth numbers across 263 closed deals, which is also a new record. With the late stage transactions, of course, accounting for the biggest part of it, which is actually 65% of total value, with the largest funding rounds, including, of course, Epic Games' $1 billion raising and Roblox pre-IPO round of $500 million. So yeah, moving on to the breaking down the deals a little bit deeper. As you may see by the graph, public deal activity continues to be strong, and it exceeds the previous full year result already. And of course, among major value drivers were Bilibili Pipe. You may see the deal values on the slide. An Iron Source SPAC and Applovin and Playtika IPOs. And what we found is that, as you may see, there was a strong, persistent growth trend in the number of public offerings from March 2020 to March 2021. But then we saw a significant drop in the second quarter of 2021, with some public gaming companies experiencing a share price decline during the last quarter. So there's some correction going on right now. And I believe Micha will elaborate on that a little bit further. Yeah, as for private investment activity, as I've already said, investors pumped an outstanding amount of $4.6 billion via VC and corporate deals. And late stage deals amounted to the bulk of it, which is 65%, with $3 billion among 27 deals. You may also see the trends on the slide. Yeah, the M&A activity has seen tremendous growth. Again, 2020, $22.4 billion. This exceeds a record full 2020 year, which saw $12.6 billion. And obviously, this increase is driven by several mega deals. I believe everybody knows about them, which is the ZeniMax deal, of course, which is the biggest one so far this year, $7.5 billion. The Moonton deal of $4 billion, which were both closed in March 21. The Glue Mobile acquisition by Electronic Arts of $2.1 billion. The Gearbox acquisition, among others, from Embracer. And the Just deal by Applovin, which was also $1 billion value, closed in April. And again, Electronic Arts acquiring Codemasters in closing in February. I'm also gonna talk a little bit about the VC rating and corporate investors rating. We also, apart from tracking the deal activity, we also compile these rankings. And again, Bitcraft tops the rating with the number one, with placing number one with lots of lead deals, including Resolution Games, Anzu, Pocket Worlds, and some others. You may all see the number of total deals, the number of leading deals, and its values in the table. And again, this is all present in the report. Makers Fund is the second one, with Index being the third one, and all other guys also present. And finally, as for strategics, of course, number one is occupied by Tencent with an amazing number of 53 deals with a cumulative value of more than $800 million. The interesting fact is that Tencent leads the playfield by deal count, focusing on PC and console instead of mobile, which would apparently be the preferable area of investment, seeing that mobile is the biggest section of the gaming market. But still, Tencent leads the playfield with PC and console deals mostly. Embracer is second. Again, this is not surprising, but what is surprising is that Electronic Arts, Sony, and ByteDance have all activated, and especially Sony has surprised us with a very diverse investment strategy. They've participated in 6 funding rounds, acquired stakes in 3 companies, and all these across multiple gaming sectors, be it esports, platform, gaming, cloud, or you name it. Well, that's pretty much it. You can see all the details in the report, and we'll get back to it. And now I'll get back to the public offerings activity. And well, Micha, would you be so kind to go on with this, to elaborate on this one?
Sure. I'll add some comments, but yeah, Anton, thanks for that great overview. I think just seeing it visually, like the charts, how it goes up, etc., is really kind of powerful and great to deliver that content this way. So I guess on public offerings here, so kind of activity in the public markets. If you just take a bit of a step back and think about like the backdrop here, the macro backdrop. Obviously, we're talking about the last 12 months being an extremely strong, favorable time for call it equity capital markets in general, and particularly for everything kind of tech and growth related, right? And I think you have bigger forces at play here that are kind of above just the gaming industry, where sort of interest rates, the Fed, etc., that would flow a lot of capital into those assets. And within those kind of segments, gaming over the last year has been an amazing sort of growth story. Obviously, as we all know, in 2020, the overall industry grew by something like 25%, which is unprecedented, and is not going to repeat again this year. We can talk about it later as well. So that's massive growth kind of COVID related in to some extent, has been driving up a lot of the share prices for most of the gaming companies, and has been reflected in public valuations also appreciating, like sort of the multiple expansion, right? So gaming businesses have been valued also higher throughout those the last year. So you've got this favorable moment, a lot of investor appetite, high valuations that have just naturally pushed a lot of people to go and tap into the public markets, either by going public, like kind of triggering that moment. You can talk about, well, as you mentioned, like Roblox, Applovin, Playtika have decided this is the right time because there is all like the ingredients are in place, but also by raising more capital, like the Bilibili pipe here that you mentioned, Embracer raised money from the market, etc. So it's just been a moment here where you had everything, the stars aligned to see this level of activity. An interesting stat that I noticed the other day is that if you take all the public listings over the last, let's say, 3-4 years in gaming, you'll have, I think, more than 20. And if you take the previous 15 years, like 2000 to 2017 or something, I think you'll have 11. So it's just like you can talk about the industry maturing, and it's just a unique time, right, where this is accelerating. SPACs that you've mentioned have been very active. It's also an interesting way for companies to strike a deal and go public. I think there is kind of a bit of a return back to normal to some extent throughout that, right? So the bar is a little bit higher to IPO, also to for SPAC deals. But I think what you see here, I guess we can talk later about what we see right now and some of the corrections, etc. But is literally very strong backdrop for public markets, and even if like some of this has been kind of returning back to the mean very recently, we're not talking. I don't think we have some sort of major crisis inside here. It's a very sort of natural evolution of things.
Yeah, I think the same with the sort of like the natural evolution here. So we're entering a phase where we have like the IPOs have now been done, and now we're in the stage where we have public companies. So like thinking about Jam City pulling their SPAC, it's sort of like, the industry has moved already into the phase where we're measuring the performance of these newly minted public companies, and like the climate is depending on that, and not so much about like who's the latest entry into the market. I don't know. Do you guys concur with this sort of understanding?
Yeah, I think Jam City might have like all kind of reasons for this, but indeed in the market, like it's deals need to make sense in terms of the future forecasts, and probably have to be sometimes a little bit more reasonable, or have to bake in some sort of buffer for this. So yeah, it's as you said, it's kind of back to normal. Well, an interesting stat that we noticed also recently is, let's say we are sort of pre-COVID, and everyone's like, let's say we started 100, right? Talking about public markets. So then you've got like the immediate lockdown turbulence, everything falls. You remember that for a couple of weeks, etc. Then everything recovers very strongly, particularly things that are growth and tech, etc. But public markets in general. And from that point, if you take an index of gaming companies, that index from that 100 had grown throughout 2020 to 160, 180, etc. Right? Almost kind of doubling if you take like a weighted level. And while if you look at the S&P 500, it grew also very nicely, but more more slower in a more measured way. And today, S&P 500 versus pre-COVID is probably like, if you say it was 100, now it's 130, 140. So really great sort of increase. The gaming world was as high as 160 maybe, and now has returned to slightly below where the S&P is, right? So that's a lot of that kind of inflation has deflated a bit, but is still above, way above where it was pre-COVID, and probably in line with how the market overall has expanded in games.
Yeah, agreed.
Right.
What do you think, Anton? Do you have any thoughts on this?
Absolutely, guys. I'm here with you. And I also think that this is absolutely normal, and all these latest news with, the Zynga stock falling after the report, and the Krafton fall right after the IPO, and the Stillfront, I believe, has also seen the stock price fall after yesterday's report. And this is all natural because first we are seeing the pandemic being counteracted against somewhere more efficiently, somewhere less efficiently, but still it's better than it was last year. And also the market is getting more and more competitive. So it's not the same as it was last year, and it's definitely not the same as it was in 2019, so the year before COVID and all of that. So yeah, this is pretty natural, and this is the exact correction that we've been talking about in the previous webinar with you, Joachim, and with Sergey last time. And I believe this is totally okay. We're just seeing that people have been excited with gaming as the market, as the industry, and some of them are now seeing that it's not all about huge revenues and growing RPUs and retention and whatever. So it's also about actually being competitive and getting new audiences and understanding your audiences. So yeah, I believe we will see the second half of the year being very interesting in this sense.
I think a final comment from me on, because you mentioned the kind of share price movements recently, etc. Is I think a lot of the investor community has kind of got used to those companies always beating targets and always increasing their guidance all the time, because that's just what has always been the case over the last 24 months. And now that it's back to normal in terms of the world reopening, etc., where those companies are saying, okay, actually the guidance is the same, or the guidance is a little bit lower, or we had to adapt to IDFA, and we're seeing kind of like Zynga, for example, said now a lot of the things are in terms of the UA, etc., is recovering in August, and then they've seen great kind of good performance on other ad networks. They made I think that comment made the Unity stock jump 10% yesterday, because they said it works, like the Unity works well for them. So I think you have people who have seen a lot of value creation over the last year. They kind of taking their profits as well. But I don't think it changes, as you said, like the long-term thesis around, okay, games are a mass market phenomenon. It's social. It's the largest, cultural industry, and it will continue to grow, but obviously not 25% every year.
Absolutely. Yeah. And I love how gaming has been growing, not only in its per se industry, if I may say so, but some other industries are also trying to implement. There's a new wave of products and startups and companies trying to implement some gamification, not exactly gaming, but some gamification mechanisms into their own products. And that's also a sign, like everybody's suddenly understood that, wow, gaming is probably the best kind of entertainment right now. And it's going to be this way for the next 5 to 10 years at the very least.
Let's go on to the next topic. We wanted to talk about the private investment side. Like I can give my first 5 cents, because this is like mostly where I spend my time outside of elite game developers, is doing early stage investing. So I think one of the big things for me in H1 was the dream games, sort of that kickoff that happened with them launching Royal Match. And what I think happened is that they really set the yardstick on a new location for the whole industry of early stage, where you need to be to be attractive for investing. It's the bar is much higher now, and I think it's really good. It sets an example for the whole industry that mobile is quality is going higher and higher. We have greater teams setting up shop their own, but also there's more, I think, better and better VCs, like you showed on this chart of the top activities on the VC side. I think that's like I would say there's more and more. Like in H2, I think these will increase even further because there is so much capital available now in the private markets. So yeah, I'm pretty bullish. Like just play ventures. I think like your weight average ranking system has something wrong there. We're much higher there.
That's actually a funny thing. When we release the report, we're getting emails from certain people trying to getting a better understanding of the process of the ranking. So yeah,
this is good. Yeah, the gamification.
Yeah. All right.
For the report. But yeah, like you guys, what do you think about the VC landscape, the private investing side? Any thoughts?
I think, yeah, and then if you go back to, well, I guess we see it on this page as well. I think here in H1, if you just take kind of Dream, as Joachim mentioned, Epic private round, and all the deals that Tencent is doing, this is going to be like a big chunk of the, at least in sort of deal value. But I think from our standpoint, we see a lot of activity. It sounds like it's the best time to be starting a gaming company or raising. There are many pockets of capital. They are, we talked about the gaming focused funds, right? And they're raising, I think, Play's second fund, and TGF in Eastern Europe, many newcomers. Generalist funds have been also very active. I guess Index obviously has led Dream games, and we also see more growth / private equity interested in the space, and some are looking at content, some at infrastructure, but it's it is a lot of appetite. We have family offices, high net worth individuals, all trying to get sort of a piece of this market and enter this. So as Joachim said, like a lot of capital and probably more to come.
Yeah. Anton, your thoughts?
Sure. Again, I agree with you guys on this one, and I'm especially happy that the Eastern Europe / Russia are also getting into this game, not only on the production side of things, which we have been historically strong at, but also on the venture side of it. And I'm especially proud that the people we personally know, they have started the TGF, the Games Fund, which focuses exactly on Russia and Eastern Europe gaming startups and gaming studios. And I believe this is also the attribute of this general trend that gaming has been accepted worldwide, not only as the best entertainment formats, at least for now, but also as the way to allocate your capital, as a great way to allocate your capital. So yeah.
Nice. Let's jump into M&A.
Right.
And have a discussion here. Anton, do you want to go first on this one?
Well, apart from what we've already discussed, there's really not much to add here, apart from, we have seen probably the biggest deals in many, many years in the first half. And I'm pretty sure that we're going to see, and we're already seeing, so we have just heard the news about Embracer buying 8 companies for more than $500 million altogether. And yeah, Unity has just bought. I've unfortunately forgotten.
Parsec, the cloud,
yeah. Thank you, Micha. So yeah, Unity just buying Parsec. So there's no sign of stopping this right now. I'm pretty sure we're gonna see a very engaging second half of the year, and it might just not be as big as the first one, seeing that, well, there won't be probably the ZeniMax level deals, but again, who knows? And of course, this does not. This has to take months to to actually get closed. So who knows?
Yeah.
Maybe there's already some deal brewing which will shock the market again, as the ZeniMax deal did last year, being announced last year.
I think Anton, it's a great comment you just made. Like, those you have even more than for the previous two pages here. You have to kind of factor a bit of a time lag, right? So to close an M&A deal, to announce it, it's gonna take at least 3 months and often 6 or even 9 months. So what you're looking at here in terms of this H1 activity is really the pipeline of things that have been in discussion since end of last year, or like in lockdown days, etc. So I think it's a unprecedented level of activity in volume and value. We've got so many of those landmark billion plus deals, which is astonishing. If you look at, like, you have this chart from just here on the left since 2020, but if you extend it, you might have like 1 or 2 big deals like this back in the days. But I think that those billion plus deals, particularly the take privates for Glue, for Codemasters, Sumo, and for like EA's shopping spree in terms of M&A has been really fascinating to observe. So I think those larger assets get the kind of the biggest premiums. At the same time, there is a lot of activity also under that threshold, right? And we see from kind of our level of activity also more buyers in general entering that space, because M&A has, like, it's a bit of a playbook. Like it has worked in terms of creating value for many buyers, and not only looking at like the last few years of Stillfront bought this and Grew and Zynga, but even like the history of video games, or like the early days of Playtika or Glue and obviously the larger US names. So this works. People have been kind of rewarded in terms of their own valuations with kind of successful M&A. So for example, in terms of new entrants, like we sold Future Play out of Finland to Plarium. Their first deal, a new entrant. We sold an Italian simulation studio called Rortos to 10 Square Games out of Poland, their first M&A deal. And you have people who have recently IPO'd or are going to SPAC, who are going to use their currency as a way to pay for deals. So it's interesting times where you have more types of deals. Some people want like very big assets that can work on a standalone basis. Some others are ready to really do the work, help company to scale and add functions, etc. So we don't really expect any kind of slowing down of that pace of activity. Although I guess we talked about valuations and like kind of return to normality, etc. before. I think this is a driver here in terms of valuations, because those private valuations across the VC, whatever, and also M&A activity are still always to some extent correlated to where people are, how they're valued by the market, right? Because they want to do deals that investors will like, that are accretive or close to accretive in terms of the revenue, the EBITDA they bring. So that's also is probably where we can expect a bit of a normalization.
Nice.
All right,
Anton, I want you here to hear your thoughts first before I go.
You mean on M&A, right? Again.
Yes. Yeah.
Okay.
Oh yeah. Yeah. I think like what I would say is happening here now, because today there was just announced that Rovio is acquiring Ruby Studios from Turkey.
Right.
So I think this kind of hyper casual shopping of hyper casual studios might actually be increasing again. Like we have Voodoo, we don't know what they're going to be doing. Is somebody looking at them already? Perhaps
they just raised a big round, right? From a Belgian family office, so they have a lot of money also to buy.
And also the Chartboost acquisition from Zynga. So I think because of the IDFA, like how long we will see sort of like the reasoning there. Do these acquisitions pay off to help on leveraging their user acquisition capabilities? Like how will the incumbents, the big industry players, move to these sectors where they need help? So yeah, I think there's going to be all sorts of deals and interesting times ahead for sure.
I have two quick comments, Joachim, on what you just said. I think you have ad monetized gaming as just a business model, which is, I think, accepted by the market as something that is sustainable. And the Ruby deal is one example. We worked on Crazy Labs, that big part of Embracer. EasyBrain earlier this year is a fully ad monetized company as well. So this is seen as a sustainable business. Sometimes, like actually, it can be seen as even more predictable. And then you have, like Chartboost and things where I guess the example of being, a gaming company and also an ad tech software company, like a platform like Applovin is, Iron Source is, with a different flavor, is something that I think people are also trying to transition to. But for Zynga, for example, Rolik, I think, has been, they don't, I think, break down the full numbers, but just looking at the installs that they have been doing, it's been a strong run and a core part of their now of their portfolio.
Makes sense. Anton, do you have anything?
Yeah, no, that's pretty much what what we think as well, and we'll definitely see way more interesting deals in the second part of the year, because both IDFA and the rising competitiveness of the market, as well as lots of new money, this will all be, and also the the store changing rules, right? Just this today's news about the US government trying to regulate both App Store and Google Play. Pretty much every day, something happens in this industry that changes the rules of the game, and even the big guys, they have to adapt. And I especially love the Electronic Arts case, when there's been no activity from them on the playfield for the last several years. And now they're suddenly buying Codemasters and Glue Mobile and Playdemic, and they will probably buy someone else soon. Who knows, right? So this definitely tells us something. The company has woken up and is grasping big mobile players. So yeah, every day things happen, things change, and everyone has to adapt. And this adaptation means more and more M&A deals and private deals, and maybe the IPO activity, maybe the public activity will most probably slow down a bit, but the M&A and the venture deal activity, this will definitely go on.
Do you guys have anything to add, sort of like trends for H2 before we go to the audience questions? So if you have questions, please put them into the Q&A. But do you have anything else?
Yeah, there's one more trend that we have noticed, and this is blockchain gaming and the NFT NFT aspect to games. And this is seen both in the in the media, on the media side of things, and on the deal side of things. So we've actually seen that. Let me just show you. In the first half of 2021, crypto gaming companies closed 24 deals, well, according to our data, versus 12 deals in the full year of 2020, and the total value exceeded $476 million, which is a 75% of the total raised sum, coming from 3 funding rounds, 40 raising 185 millions, and Animoca raising 89, and Mythical raising 75. And what I want to say is there's definitely a trend, and you can't really be sure about whether this will go on this will definitely go on in the second part of the year, but will this still be happening inside gaming in 2022 and in the following years? I'm personally kind of bearish on crypto gaming and NFTs and play to earn model, but I know people who are super bullish on that, and they believe that crypto and especially play to earn model will change the way we see, the way we use, and the way we make games in the years to come. So there's one trend to look for, even if you are skeptical about the blockchain technology.
I would agree with that, Anton. I think it's a fascinating trend. You might, who knows, maybe the next version of your report you have to add a section on how the crypto side of things, like the tokens are doing, etc., and the issuances on that side of the equity, like not the equity market, but the token market. So I think it's probably a big trend for the second half of the year that everyone's observing. From the more kind of traditional side, I think we think there's still very strong fundamentals to see a lot of the consolidations to continue. It makes sense for people to join forces, to go as things are getting more competitive and so on. Themes like kind of cross-platform or cross-play are very interesting and important across for different buyers who come more from. We have seen people diversifying from where they are kind of were coming from a few years ago, and I think that will continue. As we've touched on the VC activity, and I think there'll be also more, not only in tokens but also in equity with more funds deploying more capital.
Right.
Yeah. I think, like, just quickly on blockchain is, I think the sort of like, if you think about the Venn diagram of gamers and people fanatical about crypto, I think that that intersection should be growing. I think that there will be a market there which continues to boom, like we saw with the Top Shot this year. I don't think that would have been possible a few years ago. So I think there's going to be more of those kind of like things that pull the industry forward. So I'm sort of like neutral for the future of that segment. But hey, let's go into the audience questions. I think there's interesting things here. Like one question here from Ignacio is that how do you see the gaming VR and AR segment developing? Do you believe that there's going to be M&A activity going on in that segment in the next 2 years?
So Micha, you want to go first?
Well, I think it's definitely maturing, and if you do a bit of a kind of hype cycle thing, this is probably the time where with Quest 2 being, I think there's a question about this as well, a really good device. and a growing install base. I don't remember how many were shipped, last quarter, etc. But I think it starts to be more meaningful. You have kind of things starting to be in place for this to be a growing market and have some consolidation, I guess. And you have seen, we have observed like interesting financing rounds, right, in the space, like VR chat, I think raised 80 million, and that's really strong, I guess, engagement. You've got Resolution Games very recently, kind of VR publisher, also raising a big round. So it's probably still more investment phase and VC kind of round phase than exits. But as people like Facebook are kind of building all the infrastructure for the metaverse, they will definitely look for things, might be content, might be more tech and infra, but it's maturing. It's still a small part of like the overall 170 billion market, but it's something we pay attention to.
Yeah, absolutely. There's a huge Russian VR and XR and AR conference, and it's happened in June. A friend of mine like makes it and organizes that, and I've been listening to the guys, to the people. They're all like VR and XR enthusiasts, and there are lots of people who are very deep in the technology and in using that in many aspects. But I still I agree with Micha on the fact that the industry matures, but as with the market on the whole, I believe we're seeing a very harsh correction happening. And when you follow the media, you see that there's way less talks about VR right now as compared to what happened like 2 or 3 years ago, right? The same happens with actually esports. So it was all the rage a couple of years ago, 3 years ago. But esports, I believe, is it $1 billion industry yet? I'm not sure, but it's somewhat $1 billion annual revenue industry. So yeah, sorry, that's cat. Yeah, I'm kind of neutral on that. I'm still not sure about people really using that for gaming on a daily basis. I mean, VR is great in very niche industries like I don't know, healthcare, or maybe some some very deep B2B industries, but I'm not really sure about that being used a lot among common people in the next like 5 years at least. So when you have your smartphone, when you have even a cheap Android smartphone, you can play lots of games. You can play hyper casual, you can play decent mobile games, and every year mobile gaming is getting better in terms of production value, in terms of monetization techniques. It just gets better. And when you have lots of amazing games at your hand, do you really need to put something on yourself just to play 2, 3, 5 games?
Yeah, I think we will see what happens. I think there's enough, at least, platforms and the consumer products. They are putting new stuff out there, so nobody's really canceling anything. So I think the push is still there to grow the market. So we'll see what happens. Guys, the next question from Jeff: which subsectors of the gaming industry you guys think are sort of overvalued and overhyped?
Well, that's a really good one. I believe that NFTs and crypto is very much overhyped, and by this I don't mean to say that these things will never work, or this is just some schemes or whatever. No, I believe that this will become a part, and this already is becoming a part of lots of industries, not only gaming, lots of entertainment industries at least. But I kind of agree with Fred Wilson on this. So he's an investor, and they have crypto projects in their portfolio, and he's trying to be kind of bullish on that, but in a way that this will not happen anytime soon. And there are lots and lots of reasons that blockchain as a whole and play to earn model based on blockchain will be like quickly adapted in gaming, at least. But I don't know. I think it's overhyped, which does not again mean that it will not work. But there's definitely lots of hype right now, and lots of people who have no particular interest in gaming and more in investment side of it, in the crypto investment side of it. And I've seen some crypto games like Axie Infinity, and I know people are earning money there, and they've just recently set a new record of $1 billion transactions there, or something like that. I'm not sure. And I'm not saying this does not work. This definitely works, but I still stand on the point that this is not gaming as is. So you should not call it gaming. You should just call it, like crypto trading using avatars or whatever.
Yeah, I would probably echo this, Anton. I guess the NFT and crypto world, which absolutely fascinating, and certainly has will occupy a place overall in the coming years. Like right now, in terms of like share of voice, or how much sort of hype and attention it gets is quite astonishing, especially when you compare it with how actually sort of not so easy it is to just go and like jump into Axie Infinity on your browser and the ETH side, etc. So but I think this is how it works, and it might deflate a little bit in terms of kind of media attention, while kind of maturing in terms of what's really behind this. I think on the more kind of underhyped side of things, I guess there is I think there was some report or something about Sony, Nintendo pushing indie games through kind of their stores, etc. And I think the more indie PC console developers, small teams, and being very creative is something that overall the market is ready for, kind of spending more and having more attention. And I think if you look at people who would only play sort of AAA massive franchises, I think through COVID or through the last year, there's probably be a bit of a education of like an evolution to people to think, okay, there are maybe other things that you should search for something a bit deeper for some type or genre that I really like, or some type of art that is going to be very differentiated, etc. So I think there'll be growth there through Steam. Let's see how this hardware play is going to play out. Maybe this is more of a test for them to have a handheld device, but there's definitely a long tail of great teams and developers across Europe, and particularly in across the world, but particularly in Europe, where who are kind of quietly building very successful games. And I think they'll get more publicity. They should get more publicity.
Sure.
Yeah, I'm actually doing a webinar soon on crypto with some developers, just to share some knowledge of what it actually is. So look out for that. Let's go to the last two questions here. With so many of these VCs and the increased competition, do you believe there is space for all of them to coexist And I'll ask the following question so you can answer both at the same time. How do you see M&A valuations developing in the following years? So VC competition and M&A valuations.
Yeah, Anton, you want me to start? So I guess my two quick kind of answer to this is on the VC side. Like, believe me, this is not like overheat in terms of number of funds out there. If you just compare this to how many investors there are who look only at like, you know, B2B SaaS, and which is, you could say, a bigger market overall, but it's definitely not as busy and competitive as some other pockets of the VC world and the tech ecosystem overall. So I think they can definitely coexist. They are already kind of co-investing. It's good for the market that they can compete occasionally. So I think it's definitely a very sound and healthy state of the market. On the M&A, obviously there's no kind of crystal ball here, but as I said before, like there is always some level of correlation where on the M&A side with where public markets are, and this you can even reconnect to kind of macro trends and things that are much bigger than just games. But I think M&A has been creating value, as I said, for many buyers, and through this, buyers see that they should, you know, pay. They like there is value even if they pay a premium with what, you know, like last year, etc. They can give more and more credit to someone's, you know, future performance and say, okay, like we have the trends here, we see how cohorts are developing, we know how much marketing we can do together, etc. This is what we're gonna see through this deal in like 12, 24 months, and kind of pay up for that. And we see those deals already now. So I think it's a lot of kind of healthy fundamentals here for continued deal making, and also a clear sort of connection between M&A valuations and public valuation.
Anton, your thoughts?
Right. Yeah, there's not really a lot to add to what Micha has said. So yeah, I believe we're in for some wild rides on the M&A side of things. That's for sure, at least for the second half of the year, and definitely for the next year. And I'm also pretty bullish on the VC side. So it's not that we're reaching the point where there's no more talented studios and talented developers, and there are still lots and lots of awesome games, and be it mobile or console or PC or whatever. And I also like the indie idea of Micha when it comes to, you know, there's definitely a trend for like super huge live ops games, like what Ubisoft has recently announced, right? Making a huge live ops game out of Assassin's Creed franchise. But I believe that, you know, there's always some kind of balance. So if one side of the market goes to like these huge projects with lots updates every quarter, or maybe more often, there will definitely be a trend for more and more people just trying to make good games and not making like AAA GOS projects. They will just, and I mean, yeah, Nintendo has just announced lots of lots of indie ports for Switch, and yeah, I'm bullish on that. I believe that there's still enough space, enough money, more than enough money, and more than enough talent for that, for gaming.
Yeah, I echo what you guys are thinking. I think there's more better VCs coming as well. So the value add that VC can bring to game studios, I think that's sort of like going up a notch every quarter as more teams sort of like come through. But yeah, I think we're up now with the time. So thanks, Anton and Micha. This was really fun. I'm going to share this recording later today on YouTube, so you can watch it again, and on social media you'll get.
Can I please add one more thing, Joachim, before we wrap this up? Yeah. So there was another question regarding just a sec. I've seen that in the Q&A. So any resources you can recommend for learning more about the specific development of those kinds of games, meaning crypto and NFT. So there's this guy, his name is Pierce Kicks, and he works for Bitcraft. And this is probably, well, he's the person who knows the most about crypto and NFT, at least among people I have met and seen or heard. So yeah, I would recommend maybe finding me on LinkedIn, and I could connect you. At least try for some resources, because I know he has those and he specifies in that. And you should probably also invite him for the webinar you're doing on crypto and NFTs.
I'll ask him to join.
All right, thank you.
Thanks. Hey, thanks guys. Take care, and see you again soon.
Thanks so much for having us, and thanks to all the audience for the questions.
Yes, thank you guys. Have a great day. Bye.
Bye.
Bye.